Let me show you how to pass your upcoming ACCA Financial Reporting examination with a Section A mini debrief with some top tips how to approach this when it comes to your examination. If this is the first video you've clicked on mine, make sure you subscribe so you don't miss out on any other resources to help you pass, like today's video. And all the links I'm going to talk about are in the description of this video. You can access the notes and download them from there. Well, Section A in your exam is 30 marks, getting straight into it on there, 15 objective test questions. So if you were to follow the 1.8 minutes per mark, you should be spending no more than 54 minutes to get down in your notes on here. Now, ACCA students who I help out and have applied this and passed their examination tend to take a lot less than that. So they're looking at 40 minutes, 45 minutes, and allocating those extra bits of time to Section C where they need to focus in a bit more on the scenario. So maybe that could help you out as well. When it comes to strategy for going about your financial reporting examination, Section A, first of all, 100%, because you're fully focused. One of the main reasons the external examiner says that students fail this exam is because they don't read the question properly. They try to zoom through it. They don't understand the variables, and Section A, we'll come on to in a moment, has everything from calculations to narrative questions, interpretation on there. So it comes down to reading it correctly, picking out answers that just can't possibly be right, and then going from there really as to, right, these are the easiest, should I say, and I say that with a hushness in my voice, but compared to some of the other areas on Section B and C, A, you can pick up on some nice easy marks to actually just demonstrate your financial reporting knowledge. So if we take question number 1, for example, imagine I'm you in the examination, treating myself, I'm doing this video anyway, to the financial reporting exam for the specimen paper, and a classic exam style question to demonstrate your FR knowledge, which 2 of the following are requirements on here of preparing consolidated financial statements on there. Notice how they've got 2 in bold, but if you go to the answers on here, notice how you can actually click all 4. So if you were to click 3 in your examination and submit it and went on, you would not get the marks for this question. You can only submit 2 on there. And after you've done that, so the first bit of exam technique is read the requirement first, then you go back to and have a look at what have you got in your answers on there. So the 2 of the following are requirements for preparing consolidated financial statements. So first of all subsidiaries must adopt the accounting policies of the parents in their individual financial statements on there. So is that a requirement for preparing consolidated financial statements? The next one we had was subsidiaries with activities which are substantially different to the activities of other members of the group should not be consolidated. So if the businesses are doing something different compared to the other businesses that it owns, should they consolidate it, yes or no? Well, that is definitely not a requirement on there. If you're going to, if you own a subsidiary on there of more than 50%, you have to consolidate it no matter what it is on there. All entity financial statements within a group should normally be prepared to the same accounting year end prior to consolidation on there. Well, again, in hindsight and in an ideal world, that would be fantastic, but it doesn't always end up working like that. And then finally, we've got unrealised profits within the group must be eliminated from the consolidated financial statements on there. So unrealised profits or provision for unrealised profits on there comes from intergroup transactions where maybe the parent is selling to the subsidiary or the subsidiary is selling to the parent. And this is again a classic exam style question about consolidated financial statements where maybe you've had a little go as I've read it through to you there, and maybe you've come up with the 2 answers of all entity statements within a group should normally be prepared to the same accounting year end. As I said, it doesn't necessarily all end up that way, but again, the key thing there should normally be prepared to the same accounting year end. Unrealised profits, it has to be on there because upon consolidation, any intragroup transactions disappear upon consolidation. And the subsidiaries must adopt accounting policies of the parent in their individual statements. Well, that can't possibly be true. It's all about where the actual subsidiary is located and abiding by the rules or the laws of the land and the accounting policies that abide to it. You also have the subsidiaries with different activities that are substantially different, and the activities of other members and groups should not be consolidated. If you own a subsidiary, you have to consolidate it, whether it's a supermarket that owns a bricklaying company. If they own it, they still have to consolidate it on there. It's just to give you a feel for these are the sort of style questions that you could get given in your examination. And you've got to get familiar with the platform on here, and let's just have a look on incomplete on there for 7. Let's have a look on this. So again, this is a more sort of number style question on here where you've got the calculator. If you're doing it at your exam in an actual test centre, then this is where you can actually use a scrap piece of paper on there. But remember, you've got to select one answer that has got to be correct. So what we have on here, what is the provision which Counter-Co would report in its statement of financial position as at the 30th of September 2005 in respect of its oil operations on there? So what are we going to do about this provision? We're told on the 1st of October 2004, so at the start of the period, Counter-Co commenced drilling for oil from an undersea oil field on there. Counter-Co is required to dismantle the drilling equipment at the end of its 5-year licence. It has an estimated cost of $30 million on the 30th of September 2009, so that is in, what will that be, 4 years into the future on there. And then Counter-Co's, that's of the year end, sorry, so the 30th of September 2009 is 4 years into the future from the 30th of September 2005. And Counter-Co's cost of capital is 8% per annum, and $1 in 5 years' time has a present value of 0.68 or 68 cents. Now, the key thing just to interpret there is that, can you see how it's 4 years from the 30th of September 2005 to the 30th of September 2009, but the 5th year comes in because we're looking from as at today, the 1st of October 2004. So that's where from the 1st of October 2004 to the 30th of September 2005 is 1 year. And then you've got the 4 years after that into the future for this transaction. And we're asked to calculate the provision, what it will be at the end of 30th of September 2005. So what you've got to say there, first of all, is, well, what is the actual value as at today of that estimated cost? And you've got to be super careful with your actual workings on here, but I'll do it exactly if I'm you, using the lovely calculator on here. So I'm going to take the 30 million, and this is where it's going to really help someone who maybe might not have done the actual financial management examination, where that discount factor on there for the present value of 0.68 brings that 30 million to the present value on here. So you have 30 million on there. We have a cost of capital at 8%, which is going to cost us on there. So all we need to do is take the 30 million, multiply it by 0.68, and that's going to give us the value of those payments that we're looking for, this provision of the oil payments. This is now as at today, the 1st of October 2004. And then what you've got to say is, well, we don't want it at the 1st of October 2004. How much is it going to cost for us to actually have it at the end of the year? Well, it costs us 8% per annum. So we need to take the present value that you see on there, so the answer that we have on the calculator, multiply that by 1.08 on there, enter, as you can see. And that is where we get the second answer, as you can see, $22,032,000, which would be my correct answer on there. But it's applying the time value of money. It's, if you haven't done financial management, it's in the financial reporting syllabus, just to be aware. But again, just a couple of examples. We'll have a look at the answers on here for number 7. We'll just flick it through that you can see. And that's how we break it down, bringing that future value to the present value as at today, the 1st of October. And then applying the 8% charge for the full year, giving us a total value of $22,032,000 on there. Now that's all well and me having a look through a couple of examples. Again, if you want some extra help to get you through the Section A and also Section B, I've got you some notes actually that I use to help students out on here. Just that I go through it, you can see on the screen now. Again, it gives you a little breakdown as to how I worked it out, some analysis that I went through, what were the two different options, and there's also some extra videos on there which takes you through the whole specimen examination. So in other words, you don't have to do anything on there. You can have a go at it at your own pace. All the questions are available to you. But just little things as to, you'll know when you go through ACCA's answers that you get some workings on there, or you get a figure and you go, I'm not quite sure how to explain that. Like for number 2 on there, as to say, was it at the 30th of September? What year was it? And then finally the current liability as at the 30th of September 2005, paid in the following year. So it's just a few more details. Again, 15 questions section A, you've really got to be trying to get at least 10 out of 15 on there. And following these notes, again, you'll have access to these along with some section B ones on there to take advantage of. They are definitely going to be helpful to get you past and onto getting a 50 plus for this examination. Well, I hope you found today's video helpful. Going through those little questions, be sure to give it a massive like on there and subscribe so you don't miss out on any future videos. And I'll see you on the other side. I've put a couple of videos on the screen so that you'll have more financial reporting insights on the channel as well. But best of luck with your examinations, should I say, and enjoy the notes and enjoy the course. So thank you very much.